Hi everyone, welcome to today's video. So on today's video, I'm going to break down my mutual fund portfolio for all of you in a very transparent manner. So here is my mutual fund portfolio. You can see that I have invested roughly 5.22 CR. I'm currently sitting on a gain of roughly 58 lakhs as of today, with a return of around 11.5%. Natural response would be that this is a very old portfolio, so return to bani jata hai. No, so the average age of my portfolio is less than a year. I will actually prove this point to you also by showcasing my holdings. But the idea behind this video is very simple, that the markets are now hitting an all-time high, almost an all-time high. Many of you would be taking the mutual fund route to invest your money. That's a route which is well regulated. We feel quite safe in terms of investing our money through mutual fund. So if I can highlight and share my key learnings in terms of nurturing my portfolio, then I am hopeful that by implementing these strategies, you will be able to gain better results. So that's the spirit with which I'm showcasing and shooting this video. Also, a very big shout out to our sponsors for today, which is taxbuddy.com. It is an excellent tax filing platform. Tax filing season in India is well and truly underway. Thousands of taxpayers came forward to avail their massive 40% discount, which was valid till 31st of May. This discount has now been reduced to 35%. You're probably not thinking about filing your taxes until July, but I strongly encourage you to file taxes early and save money on ITR filing services. So file your taxes using the links in the description and comment box. And now over to the main video. So let me discuss 8 central points that I want to communicate. The first central point is the type of investor I am, because many of you would be watching this video and say, Akshat is like a mutual fund investor. Okay, so please understand this point more. Point number 1 is that I invest most of my money, right? Whatever money goes into the market in stocks, directly in stocks. Why is that the case? Because I'm a highly opportunistic investor. I'm not the type of a guy who buys and forgets, keeps doing SIP unnecessarily, never books profit and all that stuff. I do not believe in that theory. I have made enough videos around that. So my goal always is to scout for market opportunities. And if I find those opportunities in the mutual fund market, then I move to the mutual fund market. But majority of the time, I invest directly through stocks. Why directly through stocks? Because it is easier for me to cut my losses or book profits whenever opportunity presents. Now that is something that I've been able to successfully do in my mutual fund portfolio also. I will reveal this point also. Second is that I'm a macro conviction oriented investor. What does that mean? That simply means that my belief is that macroeconomic moves most of the stock market. I do believe in fundamental analysis, technical analysis, but for me, macroeconomics trumps everything. That is something that I teach on my member community also, to my students also, and that is something that I keep on preaching, that I'm a macro investor. I look at big bets and I put in large amount of money behind those bets. Just to give you some context example, so this is a video where I had purchased Nifty approximately 1 year back. This still reflects into my account. Interestingly, I'm going to sell this now, right? So I'm going to sell Nifty 50. But 1 year ago, I was very bullish on Nifty 50. I was seeing massive opportunities. I've done that time and time again, be it like IDFC First stock, be it Hindustan Unilever stock, bunch of other different things. US stocks, approximately 6 months back, I was extremely bullish. Now, I don't feel at this juncture that, Nifty 50 is going to go up at a very fast pace by 10-15%. I see better 10-15% growth opportunities in other segments, other sectors, which I will discuss subsequently on the video. But the point that I want to drive home is that I'm A, an opportunistic investor, B, I am a macro investor and I go after the things that I have conviction on. And final point is that I invest most of my money still in equities. My equity portfolio is much bigger than my mutual fund portfolio. How much? Isse kya fark padta hai? So I'm not going to talk about how much this, that, but let me very quickly take you through my entire mutual fund portfolio. And here is the breakdown. So just to help you understand the point more, so you can see that some of my biggest bets have been in direct Nifty 50 or the entire Indian stock market, which could be Sensex, or this could be BSE Sensex Index Fund. So you can see that, I have invested like 1.14 CR on one mutual fund only, like S&P, BSE, Sensex, and this is a overall index, right? Similarly, if you take a look at some of my biggest bets in mutual funds, so you'll see Navi Nifty 50. This is a pure index fund. Similarly, my third biggest bet would be DSP Nifty 50. So this is again a Nifty 50 fund. Now you'll say, Akshat, you said that, your portfolio is fairly recent. So can you prove it? Okay, so let me show you first Navi one, right? So here is Navi one. I will go on view transactions and you will see that I started building positions roughly 1 year ago on this. Similarly, if I take you to my earliest bet, and this is a mutual fund where I would have built position the earliest. So this was also in August of 2021. And in the last 1.5 years, the markets have been sideways, but my mutual fund portfolio has given roughly 11.5%. So which is a fairly comprehensive way of beating the market in a way. Now, of course, there would be investors who would have made more money than me. There would have been investors who would have lost a lot of money. So this is not like a chest thumping thing. I'm simply presenting the data in a very transparent manner. Now, let me introduce you to some of my other bets. For example, I have small cap funds. So if you check this, for example, this was purchased last month, right, in May. Again, if you take a look at this, almost all my small caps were purchased in May only, right, and just slightly maybe before that. And similarly, if I keep showing you even these index oriented, this was purchased in Jan. So the average lifespan of my mutual fund will be less than a year. So with that said, what specific strategies have I used in terms of nurturing my portfolio? So for that, let me move to step number 2 or point number 2. So point number 2 is that I'm a big proponent of passive investing compared to active investing in mutual funds. What is the difference between active investing and passive investing? Let me give you an example. SBI Magnum Mid Cap Fund. So this is an actively managed mid cap fund. So why have I purchased an actively managed mid cap small cap? I will explain that subsequently on the video. But for the time being, I would want you to notice that this amount is lesser compared to like the other big amounts that I've invested. So if you just scan through my portfolio, just a 1.14 is here, right? I mean, 91 is here, all that stuff. So you'll see that, roughly 5 CR I've invested. 2.5 around has been in pure index only. So I'm a net index investor when it comes to mutual funds. So why is that the case? So for that, let me take you to a very quick case study of ICICI Prudential. And there are 2-3 points that I would want you to notice. Very quick recap what passive funds or index funds are versus what active funds are. So the previous example of small cap, mid cap that I gave you, there what happens is that the mutual fund manager sits and decides every day, ki, acha, chalo, aaj I'm going to buy this particular stock and then I'm going to sell it after a week. Then I will aggregate new stuffs. So what is the mutual fund manager doing there? So the mutual fund manager is actively managing the portfolio. That kharidi buying, right? Buying and selling of the stock is happening quite regularly. And the mutual fund manager has a lot of discretion of what needs to happen. In my case, the reason why I prefer passive investing or index investing when I'm going and investing in something like S&P, BSE, Sensex, that's an index. Nifty 50 is an index. So here, the mutual fund manager does not have the discretion कि उसको क्या खरीदना है, that what is it that the mutual fund manager has to buy and sell. If Nifty 50 stocks are these 50 stocks, then the mutual fund manager will have to go and buy these 50 stocks only at the day when I'm depositing the money. So there can be T+1, T+2 depending on the rules. But net, the discretion for mutual fund manager on passive funds is very limited to begin with. So that is the first reason why I believe my narrative more compared to mutual fund managers' narratives. And therefore, I prefer passive funds. Second critical point is the expense ratio is less. So I have to pay less fees also. Because mutual fund manager काम ही कम कर रहा है. The fund manager does not have to use his or her brain, what to buy, what not to buy. You simply need to go and buy BSE, Sensex. That's it, right? So in passive funds. So even the expense ratio is less. Third critical reason is that, see, I told you that I am an opportunistic investor. What does that mean? That if I feel that market have reached that point or this fund has reached its peak, I can cut my position easily without bearing any losses. Here you will see that exit load is 0%. But when it comes to active mutual funds, the problem happens that these funds sometimes put 1% exit load also. If you go and sell it after 6 months, you'll have to pay us like 1% penalty, right? So that becomes like a headache and it becomes a problem for me. But I hope I was able to communicate the point. Why do I prefer passive investing more over active investing? And whenever I do passive investing, I do it in bulk. I take very concrete, focused bets. I do not do SIPs. So I do not run even one single SIP. So now you might have a natural response that, okay, you said that you're going to sell your Nifty 50. When are you selling? I'm selling it very soon, right? So I mean, literally like hopefully this week itself. When exactly I will make the announcements in the member community, stock market students, I'll reveal the entire answer, but I'm close to selling it. Why is that the case? Let me give you a very quick explainer there. See, this is the technical chart for Nifty 50. We are looking at a daily candle. Let me just quickly draw the numbers here, right? So this would be 18,800. This is the level that Nifty has recently breached, right? So for the last 2 years, the Nifty was dancing in this zone, right? So I will draw the line also. So this is the line that you see. So this was the zone that was not getting broken easily, right? So this was a problem here. Now Nifty has broken and it is trading somewhere in this zone. my hypothesis is that as the bull run gets stronger, Nifty might move up, right? So it might start trading in this zone, right? First, it will go to 19,000. That might become the next resistance point. Very difficult to predict what exactly will be the next resistance. We need to look at more data for that. But for the time being, I'm just explaining you the concept that the next major resistance point might be 19,000. Then it will become like, let's say, around 20,000, right? So these are different layers. So this would be layer 2, this would be layer 3, where Nifty would dance. It might dance from here, right? It might go a little bit here, and then it might give a breakout here, right? So this is how the dancing might happen. So I'm trying to trade these lines, and therefore right now I feel that in Nifty 50, right? And this is a very important concept here, which I am trying to communicate. So please listen to this part carefully, that I do not think that in the next 1.5 year, Nifty is going to go up aggressively by 15% without, this is the critical part, without some of the large caps going up by 25% or mid cap going by 30, 35, 40%. This is the mid cap to small cap. So this is the bet that I am playing, right? That rather than putting my money somewhere here, I would rotate a big chunk of the money here in these segments. Which large cap stocks will I be buying right now? Which small cap, mid cap companies I'll be buying? Which specific small cap, mid cap stocks directly I will buy? How will I design that portfolio? When exactly will I be booking profit? All this stuff, I will reveal the answers on the member community tab. I give very fundamental macro commentary in a point-wise manner. So if you are someone who is looking to invest an okayish amount also in the stock market, it might be useful. So do consider checking it out in the description and comment box. But to cut the long story short, I'm already letting you know that I'm going to move money from here to here. This is where I'm booking profit. Again, please go and check my live investing video. I had made enough last year, right, around this topic of Nifty 50 investing, why it was a bulk buying opportunity. And now I'm simply booking profits. Okay, so now comes the next point that, okay, if you're cutting your position in Nifty 50, do you think that Nifty 50 is not going to move? No, of course it is going to move. So again, recapping the important point that if Nifty 50 goes up by 10%, then I feel that in other sectors, for example, small cap, mid cap, some of the large caps, those aspects or those assets are going to move at a much faster rate from this point. Of course, I can be wrong. This is not a recommendation that you should also do the same. But one key area on where I'm betting right now is the small cap. And that is the reason why, and this brings me to point 3, that is the reason why I am purchasing a lot of small cap, mid caps, not only from now, but for the last 3 months. So I can show that to you. So for example, Kotak small cap fund, you will see my transaction date, right? So this is May. Again, if you take a look at something like HDFC small cap, then take a look at this. So this would again be somewhere in May. And since then, these funds have already gone up by 5577% in value. So you might have a natural question right now, Kiar, should we also invest in small cap, mid caps right now? Is it a good buying opportunity here? See, according to me, it is. What is the reason for that? Very simple, that whenever a growth market comes, if you are of the opinion that we are in a growth phase right now. Now, if you take a look at the last 3 months of FII buying data, so let me show that to you also. So here is the FII buying data. What about DIIs? Net sellers, they have been in May, but last 2 months or the previous 2 months, they were buying, right? And they have been buying for the previous 5 months before that. So net, both FIIs and DIIs are getting bullish. Now, when DIIs get bullish, and on top of that, one from my previous videos, these DIIs are sitting on their highest ever cash positions in the last 3 to 4 years, right? So their cash position is very high, which simply means that as a percentage of AUM, for example, if these DIIs or domestic institutional investors have, let's say 100 crores of AUM, then their cash position might be 3% right now, right? So which is fairly high, 3 to 4%. And this money is going to get deployed where? More specifically in small and mid caps. FIIs, when they buy, they mostly buy large caps. Iska bhi reason I can tell you, because FIIs, when they put in money, they do a lot of hedging, right? But in small caps, the problem is that you can't buy direct hedges. It is very difficult to hedge your positions. There are methods to do it, right, indirectly, but direct hedging is very difficult to do directly in small cap and mid cap stocks. But in large cap stocks, you can do that. So FII buying aati hai in large caps, right? So large caps are also going to move up, at least the undervalued ones, and definitely the entire segment for small and mid caps is likely to go up. Now you might have a natural question that, okay, which specific small cap, mid cap I should buy? Please listen to the video. I will reveal that answer also. Very simple understanding there, and you yourself will be able to decipher what you need to buy versus not. But before going there, let me cover point number 4. The point number 4, and I will take you again to my portfolio here, is that I would want you to focus on funds like Navi Nasdaq 100 Fund of Fund, Total Stock Market Fund, right? And then there are a couple of more funds that you could scroll through and see. So these were all my US bets, right? So they mostly invest in the US market, all these different funds. I wanted to put my money in the US market 6 months back. Why? Because that was a bulk buying, massive bulk buying opportunity there. I bet on it, huge profits. Now you'll say that Akshat, you're not buying direct stocks in the US. I actually maxed out my 250K, which is the LRS limit to invest in US stocks. I again made the announcements in the member community section regarding the same. I had no other option but to go via the mutual fund route. Otherwise, I would not have gone there. Now, this is something that I plan on holding as of now, at least in the short term. I don't see myself selling it. But when the Nasdaq presents a good opportunity to sell, then maybe I'll sell some of these. I'm not 100% sure as of now. Natural question comes that should we also diversify outside India? My advice, or this is not a recommendation, this is just a simple advice. Whatever I have done, that is the simple message that I give to everyone. So see, diversification is very important. And one way of diversifying your holdings is very simple, that remove or at least try to bring down your geographic risk. It is great. Indian economy is growing. Most of my money is invested in India, completely bullish on it. But at the same time, as an investor, I need to prepare for all sorts of situations. So from that perspective, diversifying my investments outside India makes a lot of sense. Right now, if I have 100 rupees in mutual fund plus stocks, then 80 goes in India right now, right? And 20 goes in the US. Going forward, I'm going to somewhat make it 70-30, right? Why is that the case? Bunch of other different reasons, nothing to do with like overall macroeconomy, but because of the fact that I want to be slightly more tech heavy, I don't see such opportunities in India. A lot of talks that, Indian IT industry is going to revive, bunch of good stuff is going to happen, but long term, I'm not bullish on Indian IT industry. I want to take more bets on innovative tech. So from that perspective, I will be following this particular split. So this is my perspective on international investing. This is an important point. Now you see, however you want to diversify, if you want to do geographic diversification, then definitely investing in some international mutual fund, so to say, makes a little bit of sense. So now comes the next point, that you would have scanned through my mutual fund portfolio and you would not have seen things like Nifty Next 50 or large cap funds or hybrid funds or flexi cap funds. So why is it that I'm not buying all these funds? Honestly, according to me, I do not believe too much in it. Why is that? So let me start the story by telling you about large cap actively managed funds. So here is the data to prove it, that whether you look at 1 year, 3 year, 5 year benchmark returns for large caps, and you can see it here, what you will notice is that only 11% actively managed large cap mutual funds beat their benchmark. So I honestly do not see any point in terms of investing in large cap mutual funds which are actively managed, right? That is what data tells. What about hybrid funds? So what are hybrid funds? Hybrid funds means that they can have debt also, they can have equity also, and when the situation arises, the mutual fund manager will make the decision to move money from equity to debt and go debt heavy or equity heavy. No, right? So if I want to invest in debt, I'll invest in debt. If I want to invest in equity, I will invest in equity. There are times when you should be, and it's very easy to figure out when to invest in debt versus equity. That's not a problem for me. So therefore, I do not have any hybrid funds. Even from a debt funds perspective, debt mutual fund perspective, indexation benefits have been done away with. So according to me, there is no difference between debt fund buying or investing in FDs. If I have to keep some safe money, I would just simply do FD over sticking my money in debt mutual funds. Okay, so what is the meaning of Nifty Next 50? So these are companies that range in market cap from rank 51st to 100. So you're not betting on top 50 companies in India. You are somehow betting on companies 51 to 100. The problem is that there is no logic to investing in it. For example, if your logic is, I'm going to buy the 50 best companies in India. Nifty 50 makes sense. It's low risk. But let's say that some company starts doing some ghabla, which is in Nifty 50, and some bad reporting comes out and bunch of other different problems. Then the market cap will erode and it will fall to rank like 70. So when the company is sliding down from top 50 to the next 50, you might catch a lot of those type of companies. So there is no rationale to investing, because the opposite rationale could also be given that, you know what, in Nifty next 50 companies that are climbing up the rankings from, let's say, some company used to rank at 120. Then it performed really well. It jumped to 70th position. So that will become a part of Nifty next 50. So there is no narrative that I can form, right? And there is no logic I can apply before investing in Nifty next 50. So there is no logic. Therefore, according to me, I do not invest even one single rupee there. Now, what about flexi cap funds? Now, flexi caps are what? So there are large cap fund, big company, small cap funds, mid cap funds. Now, in flexi cap, the fund manager jumps from large cap to mid cap to small cap whenever the opportunity arises. Now, again, I will show you the same data here. That see, right? I mean, whether 1, 3, 5 year mark, flexi cap funds do not beat their benchmark, because active investing is just bad in mutual fund. Opportunistic investing, what I'm trying to teach you, it still makes little bit sense, because there can be very clear undervalued opportunities that you could sense, right? If Nifty is at 16,400, 500, highest it has reached to 18,500, there is a very clear gap. You could potentially buy it. That's sensible market timing. But trying to time the market on daily basis, that's impossible. And sometimes I feel that flexi cap managers try to do that. So therefore I avoid it. Now you will say that, okay, Akshat, you have never spoken about mid caps, small caps, this, that, right? And suddenly you have become bullish on mid cap and small caps. Why is that the case? And why are you picking the active fund route for investing in mid caps, small caps? See, I have built enough positions on small caps, mid caps directly, right? I will continue to build it, but I have 8, 10 trusted stocks in my small cap, mid cap portfolio. Maybe it would be around 15 now. So those are my stocks, right? Now, if I want to build like larger positions, then what do I need to do? Now I cannot keep on scanning stocks after stocks in the small cap category. So therefore I'm taking the active fund route. Now you'll say that, okay, you will pay a lot of commissions and there will be total expense ratio would be more. You will have to lock in, exit load would be there. So opportunistic investment will not work. So yes, 100% agree. But see, when small cap, mid cap stocks start running, they do not run by 10, 15%. They run by 25, 30% CAGR, right? A year. So that is what history tells us, that in growth market, small and mid cap funds outperform Nifty by almost 2x. That if Nifty is giving 15% return, then small and mid caps are going to give 30% return. Now in that, if I have to pay an expense ratio of, let's say 1.5%, that is still okay. But to manage large cap funds, if I am paying someone 1.5% expense ratio, it does not make any sense. So from that perspective, I am bullish on mid cap, small cap. Bunch of other different reasons, probably I'll make a separate video. But my narrative right now tells me that small and mid caps are likely to do well. Again, not a buying recommendation from my end. Please do your own due diligence, own analysis. But that is what I'm betting on. Now to answer the question that, okay, why active fund route? That number one, I am trying to time the market and I want to take a broad bet on small and mid cap. But I do not have the time or energy to scout like 100 good stocks in it. When it comes to small and mid caps, it's mostly like VC type of portfolio investing, that you go and invest in like 100 different stocks. And out of that, maybe like 5 will become multi-baggers and they will offset the loss that you are having from other 90. So that's the philosophy with which you need to operate in small cap and mid cap. So which brings me to the next point, that whenever I am investing my money in mutual funds, I have a very clear exit plan. For example, when I invested my money in index funds, I had a very clear exit plan that when it hits its previous all-time high, I'm going to book profits and move out of it. Then I'm going to reinvest that money. So that was narrative one. So my narrative number two right now in the market is that small and mid caps are likely to outperform Nifty 50 over the next few years. How many? That depends on the market, what exactly the bull run will comprise of. But I have no need to book my profits for the next 1-2 years in small cap. So I'm cool investing from that particular perspective. But whenever I'm betting on a particular narrative, I have a very clear exit plan in mind that, okay, this is the reason why I'm entering into it. And this is what I feel is going to happen. If my narrative changes, then probably I'll book a loss and get out of it. But have very clear exit strategies whenever you are deciding to invest in anything. So now comes point number 7, that, okay, why are you picking so many different type of funds? That you have purchased HDFC also, you have purchased, Falana Deemka Fund House also, DSP also, and you have purchased 10 different types of funds. Okay, so let me give you counter examples. There was a recent scam run by Axis Mutual Fund Managers. This was the front running scam. What is it? It was just type of a scam. No point in getting into all that what exactly was the scam about, probably a separate video. Similarly, a few years back, there was a crisis at Franklin Templeton. So that was again again a company that used to run mutual fund house. So the point that I'm trying to drive home is that despite mutual fund being a highly regulated industry, scams keep on happening there. So just to diversify my risk, not go through the stress that in one fund I build like crazy amount of position, then I'm stressing out what will happen with this, when will I get my money back, all that stuff. I don't want all that jig. So therefore I spread my money. That's it. Second key point. Many of you, when you invest in a mutual fund, what you do is that you go on Google, type best mutual funds to invest. And then you will see the returns ki last 3 year mein this fund gave X% return, last 3 year mein this fund gave Y% return. Therefore, going in the future, this fund that was giving like 15% return for the last 3 years will continue to give me 15% return for the next 3 years. It doesn't work that way. Okay. Just looking at the historic returns of a mutual fund does not indicate anything about how it's going to perform in the future. The fund manager itself can be changed by the fund house. So betting on a fund manager is a very difficult exercise, I would say. Just diversify. So that's what I'm trying to do. That for example, if I have to invest, let's say 10 lakh rupees in small cap, then I would rather invest that 10 lakh money in 10 different active mutual funds of a certain size, right? How to pick a good small cap fund. There are certain fundamentals. I'm not saying randomly kisi mein bhi paisa laga do. That's not the point. But there should be some parameters and I'm just encouraging diversification. That's the key message that I want to give. Now comes the last point, that whatever mutual fund you are buying, it needs to be purchased in context of your portfolio. So for example, what I have done is that when it comes to my direct stock portfolio, I have already maxed out my position on whatever small caps directly I wanted to buy. Large cap, mid caps, I directly wanted to buy. So now if I want to build a diversified position on small caps and mid caps, then my option is that now I start picking more small caps, mid caps directly into my stocks. Or if my goal is diversification, then I just simply pick mutual funds. So the reason why I pick mutual funds is very simple, that it is to complement whatever I'm doing in the stock market. It does not act as an and or kind of a thing ki yaar sirf stocks mein karenge ya sirf mutual funds mein. It's highly opportunistic. It's more customized. It is driven by certain thought process, certain strategies in mind. These were prominent principles that I wanted you to understand. In case you want to touch upon what are some good market opportunities right now, what are some large caps that you can pick, please consider watching this particular video. It will help you understand my perspective on some good buying options right now. And then I will make an updated video. If you've enjoyed the video, do consider pressing the like button. It would allow these type of videos to reach out to more people. Thank you so much and I'll see you soon.